When tax season rolls around, many people find themselves overwhelmed by the complex and sometimes confusing task of filing their taxes. Yet, this annual ritual doesn't have to be a dreaded event. With the right approach and a clear strategy, tax preparation can become a manageable, and even empowering, process. In this guide, we'll walk you through essential tips and strategies to help you prepare your taxes efficiently, reduce your stress, and maximize your refund. 1. Start early. Don't wait until the last-minute. Procrastination is the enemy of good tax preparation. Waiting until the last minute to gather documents, fill out forms, and understand the latest tax laws can lead to errors, missed opportunities, and unnecessary stress. Start your tax preparation process as early as possible, ideally at the beginning of the year. This gives you ample time to collect necessary documents, review any changes in tax laws, and ensure that everything is in order before the filing deadline approaches. 2. Organize your documents. One of the most critical steps in tax preparation is keeping your documents organized. Throughout the year, make it a habit to collect and store all relevant tax documents in a dedicated folder or digital file. These documents include W-2s, 1099s, receipts for deductible expenses, investment income statements, and charitable contribution receipts. Having these documents readily available will make the filing process smoother and reduce the risk of overlooking important information. 3. Know your deductions and credits. Tax deductions and credits can significantly reduce the amount of tax you owe or increase your refund. However, to take full advantage of these benefits, you need to know which deductions and credits you qualify for. Common deductions include mortgage interest, student loan interest, medical expenses, and contributions to retirement accounts. Tax credits, such as the Earned Income Tax Credit, EITC, and the Child Tax Credit, can also provide substantial savings. Research the deductions and credits that apply to your situation, and keep detailed records of all related expenses. 4. Use tax software or consult a professional. In today's digital age, tax preparation software has become a valuable tool for simplifying the filing process. These programs guide you through each step, ensuring that you don't miss any important details. They can also help you identify deductions and credits that you might not have been aware of. If your tax situation is complex, or if you simply prefer the assurance of expert advice, consider consulting a tax professional. A certified public accountant, CPA, or an enrolled agent, EA, can provide personalized guidance and help you navigate complicated tax issues. 5. Understand the tax laws that apply to you. Tax laws are constantly changing, and staying informed about these changes is crucial for accurate tax preparation. For example, the introduction of new tax credits, adjustments to tax brackets, or changes in the treatment of certain expenses can all impact your tax return. Make it a point to review the latest tax laws each year, or subscribe to updates from a reliable source. This knowledge will help you avoid mistakes and ensure that you are taking advantage of all available tax benefits. 6. Maximize retirement contributions. Contributing to retirement accounts is a win-win when it comes to taxes. Not only do you secure your financial future, but you also reduce your taxable income. Contributions to traditional IRAs and 401k plans are typically tax-deductible, meaning they lower your taxable income for the year. Additionally, some contributions may qualify for the Retirement Savings Contributions credit, further reducing your tax liability. Be sure to contribute as much as possible to these accounts before the tax year ends, and keep track of any contributions for tax reporting purposes. 7. Keep up with estimated tax payments. If you're self-employed or receive significant income that isn't subject to withholding, such as rental income, dividends, or capital gains, you may need to make estimated tax payments throughout the year. These payments help you avoid underpayment penalties and ensure that you don't owe a large sum at tax time. To calculate your estimated tax payments accurately, consider using IRS Form 1040-S, or consult a tax professional for guidance. 8. Review your withholding and adjust if necessary. Your tax withholding is the amount of income tax that your employer deducts from your paycheck and sends to the IRS on your behalf. If your withholding is too high, you may receive a large refund, but you'll also have less money in your pocket throughout the year. On the other hand, if your withholding is too low, you could owe taxes when you file your return. Review your withholding regularly, especially after major life events like marriage, divorce, the birth of a child, or a significant change in income. Adjusting your withholding using IRS Form W-4 can help you avoid surprises at tax time. 9. Keep accurate records of business expenses. If you're self-employed or run a small business, keeping detailed records of your business expenses is essential for tax preparation. These expenses can be deducted from your business income, reducing your overall tax liability. Common deductible business expenses include office supplies, travel expenses, marketing costs, and home office expenses. Use accounting software or a dedicated app to track these expenses throughout the year, and keep all receipts and invoices in a secure location. 10. Consider the impact of major financial decisions. Certain financial decisions can have a significant impact on your taxes. For example, selling an investment, purchasing a home, or making a large charitable donation can all affect your tax situation. Before making major financial moves, consider consulting a tax professional to understand the potential tax implications. This proactive approach can help you make informed decisions and avoid unexpected tax consequences. 11. File electronically and choose direct deposit. Filing your taxes electronically is faster, more accurate, and more secure than filing a paper return. The IRS processes electronic returns more quickly, which means you'll receive your refund sooner. Additionally, e-filing software checks for common errors and ensures that your return is complete. When you file electronically, you can also choose to have your refund deposited directly into your bank account, further speeding up the process. 12. Double-check your return before filing. Even the smallest mistake on your tax return can lead to delays, penalties, or a reduced refund. Before submitting your return, take the time to review all the information carefully. Double-check your Social Security number, income figures, deductions, credits, and bank account details for direct deposit. If you're using tax software, take advantage of the review feature to catch any errors. If you're filing manually, consider having a trusted friend or family member review your return for accuracy. 13. Keep copies of your tax returns. Once you've filed your tax return, keep a copy for your records. The IRS recommends keeping copies of your tax returns and all supporting documents for at least 3 years, but some situations may require longer retention. For example, if you underreport your income by more than 25%, the IRS has up to 6 years to audit your return. Having a copy of your return on hand can also be helpful if you need to amend your return or provide proof of income for a loan application. 14. Plan ahead for next year's taxes. Tax preparation doesn't end when you file your return. To make the process even smoother next year, start planning ahead as soon as possible. Review your tax situation, evaluate your deductions and credits, and adjust your financial strategies accordingly. For example, you might increase your retirement contributions, make charitable donations, or adjust your withholding to better align with your tax liability. By planning ahead, you can minimize your tax burden and avoid any last-minute surprises. 15. Take advantage of tax planning services. For those with more complex tax situations, tax planning services can provide valuable insights and strategies for minimizing tax liability. Tax planners can help you structure your finances in a way that optimizes your tax situation, whether through investment strategies, retirement planning, or estate planning. By working with a tax planner, you can ensure that you're making the most of available tax benefits and preparing for future tax obligations. Conclusion: tax preparation doesn't have to be an overwhelming or stressful experience. By starting early, staying organized, and taking advantage of available tools and resources, you can master the art of filing like a pro. Whether you're a seasoned filer or new to the process, these tips will help you navigate the complexities of tax preparation with confidence and ease. Remember, the key to successful tax preparation is staying informed, organized, and proactive. With the right approach, you can reduce your tax liability, maximize your refund, and make tax season a breeze.